Hey guys, welcome back to another video. Let's spend some time looking at the Tattooed Chef. So they're down at the moment 7.3%. Now, this is partially due to the markets turning a little bit risk off given what was going on in the markets. Initially, they turned risk on, but then they kind of got spooked by some inflation, it looks like. And the treasury spiked and then equity started to fall, which was interesting after that disastrous jobs report. And obviously, SPACs are an easy target to kind of get hit anytime this happens to the market. But what I wanted to spend some time looking at was the ownership structure of Tattooed Chef. So if we look at it, what we see is private companies hold 4.5% of Tattooed Chef. Now, 4.5% could be, companies with interests in Tattooed Chef. They have partnerships, agreements, but it's a small amount. You then have your general public at 28.6. That's you and I, anyone who invested. That's your retail traders, your normal traders, the general public. You then have individual insiders sitting at 44.9%. Okay, 44.9%. And institutions sitting at 21.9%. I think this is really interesting because this is what we're waiting for as a catalyst for Tattooed Chef to really start to get moving. You want this to get onto Wall Street's radar, and that's when institutional investment starts to get to the 40% mark. Now, the other interesting thing, bar the institutions, was the amount held by individual investors. Now, individual investors here, if you break this down, 39% of Tattooed Chef is owned by their CEO, Salvatore Galletti, and 3.9% is the next highest person, and 3.7% the one after that. So Salvatore, the CEO, really is backing himself here with this role, and he's not selling. I mean, this is quite surprising for a young, fast-growing company. Normally, when you get a little bit of traction, you see the insiders, the founders, the co-founders will start to sell just to hedge their risk, take care of themselves, have some cash in the bank. We saw that with Lemonade, saw that with a few other different companies. But Salvatore still sitting with 39% is massive. And all of that, despite what we can see as a bit of a mixed bag. So you can see revenue, the blue line, growing nice and steadily. And this is what backers of Tattooed Chef are backing, is this revenue growth. Now we can see the bit of a false start there on the green line with earnings. We kind of got to positive earnings and then we hit back to break even. And that's what kind of put the market off on the latest set of earnings. But the forecast is still for revenue to really start spiking. And I think this is the thing that's got everybody interested. I think this is what Salvatore is backing himself to deliver, is this. And ultimately earnings will become profitable over time. Now, we can also see there's a whole bunch of insider trading volume within the 3 to 6 month mark. Approx 8 million there and 2.5 million bought, 8 million sold. So net, you can see about 5.5 million sold net by insider traders. But to put that into perspective, 8 million is nothing. Where insiders maintain 589 million of the 1.3 billion Tattooed Chef. Okay, so 589 million is owned by these insiders, which in essence is the management. And that's what I wanted to spend a little bit of time talking about, because normally in the structure of a company, you have your board and then you have your management, and the board are the ones who represent the interest of shareholders, and the management try to deliver the target set by the board. Now, in this case, you've got the management who's the primary shareholders. They're in charge, they can do what they want, and they're the board. So this means they can go with any initiative they want, they can move in any direction, they've got the agility, they've got the flexibility, and they can back themselves to deliver. Now, on the con side, this could be what prevents institutions from coming in. Institutions like to see the very old structured, management team, then you've got your board of directors. That's the way they want it to see it, and they don't like seeing heavy owner-backed companies. Your VC funds and your seed rounds and your angel rounds will want to see that, obviously, because you want to back yourselves. But at this kind of level of a company, when you're going through the maturity process, your institutions won't jump in until all of this governance is in place around having a board. And the other thing with the institutional investors is a bit of a double-edged sword, okay? Because by having 21% institutional investors, you've got a bit of validation, right? 21% of institutional investors, we've got some validation that institutions are buying into Tattooed Chef. Therefore, they must be seeing something good in the company, and it gives validations for others to buy and get in. But this is a double-edged sword, because remember, institutions are big behemoths of organizations, and they move based on really weird necessities. So just a sudden move the wrong direction, or the wrong earnings, or the wrong projection, or the wrong outlook, and they can sell just as fast as they buy. So whilst we do need institutional investors to kind of build this stock and move it to the next tier, which we need to 10x, it can be a double-edged sword, and you don't want them coming in too early. You need to achieve that growth before them, and then use them when you need them for the next kind of big hurdle when you're stuck. So just wanted to touch upon that. I thought it was really interesting looking at that. This breakdown did come out a little while ago, but I thought it was really interesting looking at this breakdown to see how much is owned by the insiders. I mean, I've always had that as a thing I like to look at, a secret little thing I would look at, is always to see how much of the founders and the owners are either buying or selling shares and what ownership they still have, because it tells you a lot about them. How much do they back that company? I mean, they're already living and breathing it day to day through their salary, but the fact that he's keeping 39% of Tattooed Chef and not selling and drastically, cashing that out is a big sign, and it shows that there's something there. We can see the revenue is heading in the right direction, and you just hope that they can take this further and further and expand their product lines, improve their gross margins. It's a movie we've seen before with a lot of food and beverage companies. That's the kind of blueprint they need to follow: increase their revs, reduce gross margin, improve their gross margins, become really efficient on your OPEX, and then the earnings spits out at the bottom. It's not a complicated business model. It's just something that needs excellent operational skills to just get it pushed through. And hopefully Tattooed Chef can deliver that. So there you go, guys. An update on TTCF's ownership structure. Hopefully you found that useful. If you want more videos on TTCF, comment below what you'd like me to look into, and I will spin that up for you guys. Thanks for watching. We'll see you in the next one.